Hello and welcome to Business Finishing School. Let your business brain finish what your entrepreneurial heart started. Our catalyzing statement is a successful entrepreneur inside of every business. Enjoy this module. Hello and welcome to Module 5, Business Entity Structure to Leverage Long-Term Wealth. And I have to tell you, I'm a serial entrepreneur, starting one business, then another business, and then a third business. Opportunities arise. And like so many of my friends who are also entrepreneurs, we kind of create this hornet's nest of ideas that turn into businesses that are either divisions of a business, or then you create a separate entity, etc. And it all kind of makes sense to us. It's like having the messy desk where you know where everything is, but if anybody had to walk in and try to figure out your desk, they'd lose their mind. So this was one that took me a while to wrap my head around. And I remember the first time I met Rick and he started advocating this particular approach. And he has, this holding company's got, multiple entities, dozens of entities, and how simplified it all works and functions and is structured, etc. And he explained it to me, and I said, oh, that's really kind of interesting, but I don't think it really applies to me. And then he'd explain it again, and then he'd explain it again. And it took me about a year before I really started to say, oh, now that I'm looking through this lens and looking at my life, this would be simplicity on the far side of complexity, as we always like to talk about. So I love this particular one. You might have to listen to it a few times. And let me also just disclaim, we're not lawyers, we're not giving tax advice here, none of those types of things, even though they'll be a part of the conversation. You need to consult with your attorney about making the changes you want to make based on this module. You need to consult with your accountants on tax issues if you're going to make changes relative to this module. But we're going to tell you how Rick presents it and how we feel entrepreneurs should adopt this into their business lives. So, Rick, I know you're passionate about this, and sometimes you feel like you're a lone voice singing out there in the wilderness. But go ahead and tell them about your thought on this.
All right. Let me back up a little bit and talk about simplicity, probability, and leverage first. Almost more than any other module that you're going to learn in these 12 modules for the first year of the program, this will give you leverage. It will give you probability, and what I mean by probability, increase the certainty of your future success. But most importantly, it will give you simplicity. And I hope that you embrace those three words as you're going through the module and ultimately the implementation guide. So let me start with a principle. And if you recall in the last module and the one before that, Patrick started talking about principles and the difference between a rule and a principle. A principle to me is everlasting. It goes back thousands of years and it will go forward thousands of years. And here's a principle that I believe with every fiber of my being. A dollar in your business, think about a dollar of profit, is worth far more than a dollar out of your business. Just think about that for a second. Most entrepreneurs, I don't care how big or small they are, but most entrepreneurs and business owners believe that they can create wealth by taking money out of their business. And I believe that's a mistaken belief. Think about Bill Gates, who we all know. Could you imagine if the first year that Microsoft had a profit, and by the way, this is how most entrepreneurs think. The first year that Microsoft had a profit, Bill Gates looks at the books and says, oh, we made $3 million. Let me take that money out. I've got to buy a nice house because I know I'm going to have a family soon. Let me buy some real estate. Let me start making money. And what it does is it takes, the focus away from the business, and this is how the vast majority of entrepreneurs think. But number two, it makes you think about your business as a piggy bank as opposed to thinking about your business as a wealth-generating machine for you and for your family and for your shareholders and for your employees. What happens when entrepreneurs take money out of a business, in my opinion, a lot of times it builds distrust because your employees say, well, wait a minute, here I am working really hard. I want to have something in my future, some equity, some skin in the game, something down the road. But I know every year my boss just takes money out of the business. But now think about it again from the perspective of Bill Gates. When Bill Gates had Microsoft, when he was running it at the beginning, he said, I envision a world with a computer on every desktop. Now I'm going back, talking about a catalyzing statement. Employees came to Microsoft to work there, and he said that when they only had a handful of employees. He wasn't much different in size than you are now. But when he said that, people bought into the vision. And when they bought into the vision, they worked harder. And when he didn't take money out of the business at the beginning, they wanted, to be part of this big picture because they had trust. They believed in the catalyzing statement. They believed in how he ran the business. And think about most entrepreneurs. They say, well, I'm the owner and you work for me. And what I'm trying to get you to realize is there's another perspective here. It's all about creating an entity, a business structure that creates wealth not only for you, but for your long-term employees and for your executives. And we're going to dig deeper on that. But from a philosophical perspective, I wanted you to understand where we're coming from on this topic.
So it's, I think, kind of an important understanding that when you have a stronger balance sheet, basically, better liquid assets on the books, that the idea isn't, let me just take everything out and have it in my personal bank account, but you strengthen the business and the business can build on itself. And what Rick said, one of the things I think is kind of a lure, entrepreneurs like to chase the shiny pennies. So you find that, well, let me see, I can pull a bunch of cash out of my business. Well, now I've got an advisor that's telling me I need to invest this cash somewhere. It shouldn't just sit in a bank account. So what am I going to do? Well, either I'm going to buy luxury items, which don't build my business, or I'm going to invest in areas that I'm not expert in, like, I'll go buy some real estate, or I'll go, invest. I know one guy who lost a bunch of money in a coin-operated laundromat. And when he lost all this money, I said, what do you know about coin-operated laundromats? Nothing. But he pulled all this money out of his business for the lure of a passive income, put it over there, and this thing's going to just keep paying you, and you don't have to worry about it. So the whole concept is stay focused, accumulate money in your business rather than pull it all out all the time. Doesn't mean you don't pay yourself a good salary, doesn't mean you don't take bonuses, distributions, what have you, but it means that you stay focused in your entity and build wealth there because, as Rick said, and this was the mantra I had to keep playing over in my head again, $1 inside my business is worth a lot more than $1 outside of my business. So once you kind of adopt that philosophy now, Rick, now there's kind of entity structure, because let's say you're somebody like me that says, well, you know what, I've got an idea for a supplement line, and I want to create that. I've got an idea for X, Y, and Z over here, and I want to create them as somewhat separate, but could be related entities. So what is this structure, this holding company structure that you advocate?
In my opinion, and this is how I run my life, and what you're going to learn in the next module is how billionaires run their lives as well, is they do all of their business dealings through an entity or through several entities, but it starts with a holding company structure of some kind. Now, you're going to have to talk to your advisors about this. Do you want to set up a C corporation or an S corporation or an LLC? But it doesn't matter what the structure is. It matters that there's one entity. And let me tell you why. I happen to do a lot of investing. And when I make an investment, I do it from my holding company. So now when it comes time for me to do my taxes, the way I'm compensated is I get a salary from my holding company and a bonus based on performance. I have a friend who likes to co-invest alongside with us. So if our company writes a check, my friend also likes to write a check. So when you look at a holding company writing a check versus an individual, and I want you to think about yourself when I'm talking about an individual. In talking about my friend, when it's time for him to do his taxes, he has K-1s coming in from all over the place. He has checks that have to be accounted for. And it's just him individually making investments, okay? It's a complicated way to run someone's life.
Because the idea, some people say, I want multiple streams of revenue.
Right.
But what you're describing here is your friend does have multiple streams of revenue, but they're coming directly to him. Right. So now he's got this very complicated, a lot of tentacles as far as his tax life, et cetera, as compared to one entity, a legal entity, a holding company, where all the income from the varying ventures flows in, and then you just pull out one check or one, you get paid from one entity, which simplifies it.
And not only does it simplify the chaos, and I'm pointing in this direction because I'm referring to my friend, but think about Warren Buffett and Berkshire Hathaway. Now, I don't want you to say to yourself, well, I'm not Warren Buffett, but I want you to think about it. Warren Buffett, because the entity Berkshire Hathaway has 90 holdings, all of these holdings down here below the holding company called Berkshire Hathaway, they have a certain amount of worth. But then there's an intangible worth above it. In other words, Berkshire Hathaway is not worth only what their holdings are worth. There's a multiple of that. And if you look at the stock exchange, you'll find out that Berkshire Hathaway over time trades on the open market at somewhere between 10 and 20 times profit. Okay, when you're making investments over here, your life is complicated, but you never get the benefit long term of having these investments create value in a holding company structure. So I hope this is clear. I'm going to talk about this a little bit more in the implementation guide. But the bottom line is, I want you, whether you're a one-person operation or you have 100 employees, I want you to think of yourself as an enduring company. And how do enduring companies operate? Enduring companies do things that real companies do. Let me give you an example of what I mean. A friend of mine owns a restaurant chain. And one of the things I found interesting was, big chain, very successful person, we went out to eat one night at his restaurant. And the bill came, and there was a large group of us. Mm-hmm. And when the bill came, he pulled out his credit card and he paid. And which to me is normal. He paid with his own credit card. He said, well, I'm eating, I know it's my restaurant, but we like to treat it like a real company. What most entrepreneurs do is they say, well, I'm the owner, it's my restaurant, let me just get a free meal. Mm-hmm. And then the employees, in my opinion, they say, I don't think I'm going to stay here a long time, because it builds a little bit of distrust. Mm-hmm. So now let's think about if you're a real company, and think about a holding company structure. Treat yourself as the owner, just like any other employee would be treated. Have a base salary, so you get paid a regular amount every month. We like to pay ourselves monthly. Now, your family is secure, they know what they're getting paid. Put yourself as the owner on an incentive plan. And I like to say, and you may have heard this before, that every employee, including you as the owner, should be paid 5 ways. The first is a base salary. The second is an individual bonus based on you achieving your quarterly objectives, which we talked about in a prior module. Then a company-wide bonus. Then you could say at the beginning of the quarter, if we exceed revenue from last quarter, every employee in the company, including you as the owner, gets $1,000 or $500, or we get a big party, or we go on a cruise. But that's a company-wide bonus. The fourth way that everyone should be compensated, including you, are some type of benefits, healthcare benefits, whatever. You can create that plan yourself. But again, you want to have an enduring, real company. So you want all the employees to participate in that. And then lastly, you want some type of long-term incentive. It could be stock ownership, and as the owner, you're going to get that. But for your employees, they can, over time, vest. So for example, you can give a key employee 10% of the business, and you tell them, you only get 1% per year for 10 years. So if they leave on year 2, they've only vested 2% of that 10%. I hope this is clear. But the bottom line is, our objective here with these modules is to make you a better business person. Not a better practitioner or whatever your trade is, but a better business person. When opportunities come to you, and they will, and they align with your purpose, we want you to be better business people and build a real entity around it, a holding company that as opportunities come, they're subsidiaries of that holding company. They're not one-off deals that you do individually, and then at the end of the year, you try to figure it out with your tax accountant. We want you to build a real entity with real value. Let's go back to the Warren Buffett example, because I really want to be clear on this. Think about this, and people don't talk about this too often, but Warren Buffett likes to buy cash-flowing companies. So let's say that he bought a chain of hamburgers. We all know that he owns Dairy Queen. He likes to buy private companies at, and it depends, but he likes to buy them around 5 times profit. So let's say that a hamburger chain had $10 million in profit, and Warren Buffett wrote a check for 5 times that $10 million, or $50 million. Okay. So now he takes that entity and he pulls it into his holding company. Well, his holding company right now is trading somewhere around 16 times profit. So that check that he just wrote for $50 million, for $10 million in profit, pulls it into his entity, and now it's worth $160 million. It sounds like magic, but it really isn't. It's because he created a brand and a reputation that he knows what he's doing, and people believe that those cash flowing entities inside his holding company are worth far more than the cash flowing enterprise outside of his holding company. What I'm trying to get you to realize is, instead of just doing one-off deals all over the place, have a holding company structure that aligns with your purpose and catalyzing statement and aligns with your values and everything else. And put all of your investments in that so that you can create wealth for you, your family, and your shareholders. And I think it's important now for you to understand what's motivating me here on this module. My purpose, as you know, is to inspire entrepreneurship in everything I do. My number one value is simplicity. I like to keep things simple. My catalyzing statement, personally, I have a personal catalyzing statement, and that is an entrepreneur in every home. Most importantly, a successful entrepreneur in every home. And it's by doing things like this with Patrick that I get to increase my catalyzing statement, if you will. And then on a professional level, I envision a successful entrepreneur in every business. The reason I wanted to tell you that is I wanted you to understand that you can create a holding company that has a crystal clear purpose, catalyzing statement, and primary value. And you can make all your decisions through that lens. And what happens is your life and your business becomes fully aligned, and then it begins to leverage itself. So it's very, very important that you treat your business like a real business, and you don't treat it like a personal piggy bank. Because what happens when you treat it like a real business and you get paid, as we talked about earlier, a regular salary, whether you're married or not, your life becomes more stable, and you can count on that money, versus if the company has a great week or great month or great year, you sweep the piggy bank, which most entrepreneurs do. Yeah. And I just don't get it. It's almost like killing the goose that lays the golden eggs, not only for you, but because you're building distrust with your employees.
So what if somebody says, you know, I have one focused business. In other words, I'm really not looking to branch out. I'm not looking for subsidiaries, et cetera. At that point, they probably don't need a holding company. They just need to make sure that they have the right business structure for that business. Not a proprietorship, incidentally, because we find that a lot of, especially professionals, doctors, lawyers, accountants, what have you, people who are providing individual services, many times they just do a proprietorship. Some people are opening up stores, and it was just a proprietorship. My father owned a health food store growing up. I don't think he ever incorporated. I think it was just a proprietorship and ran it exactly the way that you say not to, pretty much. So the point, I guess, is that, number one, you should be incorporated no matter what in some fashion based on what you're doing. But number two, if you've just got one business that's a core focused business, you're not looking at creating other divisions, getting into certain joint ventures or partnerships with other people that might come in. In that case, it's not really a holding company. That company is your entity. You stay strong in that entity in all the ways that you say. Leave cash in it, don't drain it, build it, compensate properly, etc. And then if you ever want to add something else, that's when you start to say, okay, maybe the holding company is either the first business, or you create a parent holding company that's going to take the first business and then the next venture and then the next venture.
Let me explain it this way. You can read, if you Google this, you could read articles about how important it is to be focused in your business. And you could find many, many, many articles about that. And then you could read articles about how important it is that you stay diverse in business. And here's the interesting thing. Once you understand proper holding company entity structure, You absolutely, positively have to be both. You have to be focused and you have to be diverse. And here's what I mean. When you look at very successful businesses, over time, they become entities that have to get involved in other businesses. It's just a natural evolution. So let's say you're focused on one business. What I would assert is that you take that one business and set up a perfect legal entity structure for that one business. And as opportunities arise, don't do them on your own, do them in your business and create a subsidiary. Let me give you an example. When we were approached by an investment banking firm that wanted to take us public at one point in time, this is going back many years, I really liked this investment banker. He was a great guy. His name is Bill. And we said no, the timing wasn't right. But several years later, Bill approached me and said, I really want to get into the fund business. And I really want to do business with you. We like how you operate. So what did we do? We took our existing holding company entity. We partnered with him on a separate entity that we owned half of and that he owned half of. And we invested some capital and he invested his energy. That became a subsidiary company. I know someone who owns a series of hair salons. They came across a product that they liked. They approached the company that sold this hair care product and they said, we would like to own half your business, but we want to be the exclusive distributor of it. They worked out a deal, and now this sole proprietor who owned several hair salons now had a separate company that they own half of with a manufacturer of hair care products. It's a natural evolution. So that's why I think you need to be focused on whatever your core business is, but you need to diversify. And if you embrace this philosophy and you're not taking money out of your business, your holding company over time will evolve into a diverse business. And each one of these subsidiaries, ironically, are their own business entity. And so if something happens to one of the entities, like you make a bad business decision or the market crashes or you have a lawsuit that creates that business, it's just relegated to that subsidiary. All too often I see companies where they put everything in their main subsidiary and something changes, like we had the major crash that happened in the economy in 2008, and now you're out of business. But if you have one holding company structure and everything's a subsidiary under it, and they're all separate deals, then you're protected. There's a lot more insulation there. A very important point that I want to bring about right now is that many entrepreneurs that I interact with say, oh, I want to sell my business someday. And what I want you to understand is that it is very, very hard to sell a business that is not a real business, that doesn't treat the business like we're talking about here. So once you understand these principles, and not only the principles in this module, but all of the modules, your business will be much more saleable because people like to buy enduring companies. They don't want to buy a business that all of the revenue is generated by some tireless entrepreneur who works 80 hours a week. That business isn't worth a lot. But the business that has all of these rules in place, that has subsidiary businesses associated with it, that has long-term growth plans, that has executives that are compensated those 5 ways that we mentioned, they're real tangible businesses that have future wealth opportunities. Another thing I wanted to point out is, as of 2010, there's a new person that's the wealthiest person in the world.
Right.
And his name is Carlos Slim. And Carlos Slim says something that's very interesting. He says, when you take $1 out of your business, it evaporates. Let me say that again. When you take $1 out of your business, it evaporates. Isn't that interesting? Carlos Slim, the wealthiest man in the world, he's actually from Mexico, is telling us the same thing that we're telling you here, and that is keep your money in your business. Let that money work for you inside of your business versus taking it out of your business, paying 50% income tax on it when you're rolling all the taxes, investing it somewhere else, or buying a piece of real estate that you have no expertise in. Now, if you're a real estate entrepreneur, different story. Then you want to keep your money in your real estate business. But what we're trying to get you to understand is there's some universal principles associated around this topic, And Carlos Slim is saying the same thing. I also want to point out something, and that is both Patrick and I are really passionate about the materials in these modules. And we are not using a traditional marketing path. And the reason we're not using a traditional marketing path is because it's very expensive. And if you remember the new profit paradigm, we don't want to go down that road. So what we like about this program is we're encouraging people like you who have gotten value out of this program to spread the word. Tell your friends and associates and networks that you belong to go to businessfinishingschool.com and help us, while we're helping you, to spread this important message about entrepreneurship. Because an entrepreneur in every home, and more importantly, a successful entrepreneur in every home, will help all of us. A rising tide raises all ships. So we would like your help to spread the message of businessfinishingschool.com.
I think one of the things that applies here is the principle of scaling. And this is the paradox that Rick talked about earlier that I think is really important, in the sense that you want to keep focus, but at the same time you want to become more diverse, and they seem like antagonistic forces until you have a meta concept, kind of an overview that says, here's diversity and focus together. And I think a big part of this structure, and it took, again, a while for me to start understanding this, and a part of it was watching you operate in the way that you do things, is that when you are starting new businesses or spin-off businesses from whatever your core business might be, again, if you're a practitioner of some variety and you start to create product that goes along with it, like you said, the shampoo from a hair salon, or a healthcare practitioner that's got affiliated products that they sell out of their practice rather than just providing services, etc. What starts to happen is in every new entity, you either have a partner or you start it and you bring somebody in and do the 5 types of compensation so that they are laser focused there, so that there's focus in every entity by somebody who's not just an employee that comes and goes, but that's invested in the business as far as its vision, emotionally, they're compensated properly, there's a long-term benefit to them, etc. So on the micro scales, every individual entity has its own team that's focused on it, and then you, if you're going to be the overlord, for lack of a better term, you're the person who's going to focus on that holding company that holds all these other entities to make sure that they're all feeding up into it like they should. So when you start to think about it, it starts out kind of like overwhelming, and I remember this myself, trying to think through this and, wow, it seems overly complicated. But when I really started to understand it and then also watch it in action through what you do, I recognized, this makes everything easier and simpler. People in place, they're accountable, they're focused, and then I've got this wider dream, this wider vision for what I want my entire career experience to be based on that. So another person who I think is a great example of this that you've spent a lot of time with is Richard Branson. I mean, he's got hundreds of companies. So, and talk about that and how he lives.
Well, the interesting thing about Sir Richard Branson, who I was very, very fortunate to have traveled with 4 times. I spent 2 weeks on his island. That was 1 week in 2008 and 1 week in 2009, and then 2 other opportunities to travel with him. One thing I notice about him is how simple his life is. And it's reported that he has an interest in 350 companies with 25 billion in revenue and something like 25,000 employees. And yet, and this is going to sound extreme, but he has a simpler life than I do. And he probably has a simpler life than you do. Why? Because he understands business entity structure. And the structure holds the accountability of the employees and of the executives and of the catalyzing statement and the vision, etc. But it's very hard for small entrepreneurs to get this because they want to put their Superman cape on and they want to fly in to save the day. And that is not how you want to run your business, to create wealth. Because at the end of the day, aren't you in business to build value in the world and get a return for that value? So why do you want to be frustrated and stressed all the time? And when you understand this principle and you put it into practice and you do the implementation guide, I promise that you'll end up with those 3 words more illuminated in your life: the simplicity, probability, and leverage.
Well, I think at this point, you've got a pretty robust understanding of this concept of business entity structure. Now, let's talk about the application of this principle. So now let's give some examples of applying these principles in the real world.
Okay. One thing that I see in businesses that I look at is that entrepreneurs or executives or owners or shareholders, they take money out of the business because they want to make investments. We're all told that we have to make investments. We've got retirement accounts, we've got personal accounts, we're told that we need to own real estate. And a lot of times people are focused on how can I get my hands on that money and what taxes will I pay to get it out of the business, because my advisor said I've got to set up a trust and I've got to do all this other stuff. I believe that it's more important, as we talked about in the module itself, to keep money in your business. And rather than having all these complex structures to maximize tax advantages and whatnot, think about your business as the investment holding company as well. So you're a shareholder in your own business, of course. So as the business generates profit, why not have an investment portfolio inside the business? Think about that. Your business could take a percentage of revenue every month and buy stocks of companies that it likes. Or if you're into commodities or whatever else you like to buy, do it inside your business, because now what are you doing? You're building a cash cushion in your business, because I don't care what business you're in, storms will come. And we're going to talk about that in a later module. So I think it's important to fortify your business. Another thing that I see happening often with entrepreneurs especially is they're given advice if they have a small practice of some kind, or if they are in a piece of real estate with an office. A lot of times they're given advice that it's important for you as the owner to buy the building that you're in and lease it to your business. Now, I'm not giving any tax advice right here, but what I am trying to get across to you is to think about your business as an enduring enterprise, and more importantly, think about your executives who come to work every day and do a lot of the heavy lifting. All your employees do heavy lifting. When your employees learn that you personally bought the building and that the business is leasing it back, they start thinking, well, how does that affect me? And how does that affect my incentive plan? And how is this going to enrich him or her as the owner and take money from my pocket? I believe that moves like that build distrust in your organization. I firmly believe that. I am not telling you to take on my perspective. That's something I believe. I'd rather have the business be very clean and very clear and very saleable. And when you go to sell a business that has a lot of these arm's length transactions like that, it becomes very difficult. So you have to think about that if you're intent on building an enduring enterprise that will have a sale at some point in the future.
So what other examples would there be of a business that's cooking along and doing well, and now it wants to expand, and their options are to expand under the same entity or create a separate entity? What would be the departure point as far as the application, as far as do I want to do it this way or this way? What are the considerations?
Well, I'm glad you asked that question, Patrick, because what I think we should do now is use this business, Business Finishing School, LLC, as an example of how we did it, because Patrick and I together created this business, and we decided to use our holding companies as the holders, if you will, of the entity. So why don't you describe it?
Well, here's how it started. We've got this great idea. We're excited and passionate about it. We think there's a need there. We have the expertise. That's how entrepreneurs go. It's like, wow, we both are busy people in our current businesses, yet we see a need, we see that we have the talent, and we know that we want to get it out there in the world. We believe in it. So the old me would have said, great, Patrick Gentempo, me individually, is going to own 50% stake and Richard Sapio is going to own 50% stake, and you and I are new partners. But you came in and said, listen, this isn't just you and I going to make this whole thing happen. We have executives that work in our companies that also have to get involved in this. And they don't want to get involved in Pat and Rick's little adventure. They want to see that this is something that is going to contribute to a business that they dedicate themselves to.
Right.
So we basically took my holding company and your holding company, and that's who owns the 50% stake each in Business Finishing School.
Yep. So just to take it further, what we talked about earlier is I have a holding company, and that holding company now has a brand new subsidiary, which is a 50% stake in a business entity called Business Finishing School, LLC. And Patrick's holding company now has a 50% stake. So he has another subsidiary. And this is how businesses evolve. And this is how yours will evolve if you really go hook, line, and sinker into this principle and you start living it. And it will really simplify your life, because if you're an effective business person who's growing your wealth inside of an entity, you're naturally going to evolve, and you're going to come across opportunities like this. It's very important that as opportunities come, like Richard Branson's 350 holdings, you want to be able to diversify and take on that new opportunity, but you don't want to make your life more complicated. And this is the way to achieve that.
So it seems we can go on forever about this, but I think you get the idea. And of course, varying people are at different scales right now. Maybe you're a newer entrepreneur just trying to get your first business going. Then that's great. Keep this in mind moving forward, but remember the principles. $1 inside your business is worth many times more than $1 outside your business. Or once you take $1 outside of your business, it evaporates. Those little principles by themselves will get you into a position through your career as you're moving forward to be able to say, oh, I'm ready to start setting up some subsidiaries to my business because it succeeded, because it's built wealth, etc. So Rick, before we close, is there anything else you'd like to add?
Yeah. I want to make sure that whether you have one employee or you're a sole proprietorship or you have a lot of employees, that you don't look at yourself as, oh, this is too onerous and too complex. We're teaching you a new perspective here. Let it sink in. Maybe it'll take a year or 2 or 3 for you to really absorb this. But I was really excited recently when one of the people inside the program happened to see Patrick and I walk into a hotel recently. And this particular gentleman was an older gentleman, about 55 years old, who has a multiple of businesses. And he was telling us how impactful these principles have been for him. And this is an extremely successful person. So I want you to understand that these principles, whether you're small or large, are principles that apply across businesses. So don't take yourself out of the game because you think this might be too complex.
So older is 55, huh?
Yeah.
We're going to have a conversation after this recording's over. Anyway, you might want to watch this a couple of times. The concepts really make a difference because we're talking about the outcome. We're talking about not just what tomorrow brings, but building a long-term sustainable business that a year, 10 years, 30 years from now, it's going to be a huge difference if you follow this principle. And remember, it's a principle. It's not just an idea. It's not a rule. It's literally a guiding principle that translates into outcomes that if you are somebody that's entrepreneurial or in business, you're somebody who's going to benefit from these concepts in a huge way. So we appreciate you very, very much, and thank you for watching Business Finishing School, and look forward to the rest of these modules. Thank you for watching this module of Business Finishing School. Let your business brain finish what your entrepreneurial heart started.